And we're back.
Indeed, at an unfortunate time for crypto. But before we start ranting, I think we should splice in that bit here from episode 0.
Building an algorithmic stablecoin backed by basically speculative magic beans is clearly like not, I don't, I don't want to say it's not possible, but s- certainly anything that is so like at the whims of public sentiment is not a good backing for a currency that's stable and meant to be used to like buy stuff. Like there's going to be this there's even more systemic risk than in the traditional financial system. I mean it what an absolutely insane week. And I think this is probably the first time there's been sort of systemic risk that has caused it. Like things have happened in the past. We've had the Dow, we've had, MT Gox, we've had all kinds of stuff that has caused the whole market to decline. But I don't think ever before there's been so many separate sort of organizations, separate chain foundations that have been holding each other's
Yeah.
tokens and then had to start dumping them. So wow, what a completely batshit crazy week.
It's interesting that you mentioned the DAO actually, because I brought this up in conversation with somebody from the Marinade team, where he posited that there was a possibility that if this whole thing with Terra had continued growing, it might have become too big to fail. And actually, I don't think that's something that we are going to get in crypto at all when multiple chains are involved. Something like the DAO, where it's a threat to a single change, that ecosystem might try to save it. But if you have like billions, actually the chance from different chains, I think that actually the chances are that we're going to get is too big to be saved in time, because how do you coordinate and who do you go to for a bailout, right?
Well, that's actually kind of an argument I think against bridges. So I agree with that, but at the same time, if we have a lot of capital locked up in bridges, I think we might have a situation where some chain is such a hub for bridging that it kind of is too big to fail, and it would sort of destroy the assets on all the other chains as well. But I agree, at least not right now, right? So there's and we can you can look at this from many different perspectives, and obviously it's a real shame that so much wealth was just annihilated. Like it, it's impossible to see this as like a purely positive thing. I think for the industry, um,
Oh, this is gonna burn us for years. I mean,
years,
and
yeah,
and and we'll get back to that. But actually, on the last episode, I think it was, I mentioned that I was worried. One of my nightmare scenarios, basically, is governments deciding that they need to do something about this and saying we're gonna ban stuff for your own good. Just wait for a nice CBDC. And this is one of my worries of something that might come up.
well, there's currently at least rumors circulating that the EU is considering banning algo stablecoins. Um,
I haven't heard of one.
and so I haven't verified these rumors. Obviously, they're just rumors anyway. But I so okay. Let's look at it from both sides. So one side is that the ability to create an algorithmic stablecoin, which doesn't rely on holding any sort of assets from external systems or the traditional financial world. It's it's something that like we don't know if it's actually possible, I would argue. Like we don't know, we don't have a design that we know will hold up in any market situation. And arguably that doesn't exist because it's sort of always backed by something, and in the Terra case it's backed by their own native currency largely. And like it it just doesn't work unless that native currency has value or whatever the thing that is sort of collateralizing it. But that doesn't mean that algorithmic stable coins aren't or can't be like a useful layer, right? In the sense that if we like we could have like let's like look at it this way. Um it would be very efficient if we didn't need to over collateralize everything. And the traditional financial world already does that, right? They have fractional reserve, et cetera, et cetera. And like if we could achieve like a really good way to do fractional reserve, I think that is actually a useful thing for the world. If you can do it openly and transparently and it's like very reliable. Um, I think that there's a lot of benefit in exploring that. On the other side, though, like there is, I think, a valid argument to be made that the average user does not understand the risks. And this is the whole nanny state thing, right? Like, and I'm typically broadly on the boat that like every human should be able to freely do what they want and like as long as it doesn't harm others and all that stuff. But I'm also aware, like I know many people who were excited about Terra and did not understand the risks, right? They see the yield, they're like, everyone else is
Yeah.
doing it. Let's get in there, right? And maybe it's not even like a stupidity thing. It's maybe they could understand it, but they don't have time or whatever else. Like I don't have time to figure out how every system works. And so obviously not a lot of other people do either. And so they just kind of go with what other people are doing. And there's this effect where like if a few people think it's good, then more people think it's good. And ultimately, like maybe nobody really knows, but that is like it's not completely stupid to approach this from the perspective of like maybe there should be some boundaries at least.
Honestly, I this kind of thing is obviously not ideal, but it's this kind of thing is a shit show. And quite frankly, and if you look at the news that came out that Buzz was behind Basis Cash, this also ties into what we were saying earlier about people distrusting anonymity in the future. But what I'm driving at is that I do think that people should be allowed to do with their money whatever they want. And I can recall, I think it was Stupid Idiot who said something like, it's absurd that in the States you're allowed to just go into a casino and bet it all on
Yeah.
black, but you're not allowed to take an early bet on crypto and startups.
Yeah.
So to me, it's just basically hypocrisy. Governmental
So
hypocrisy saying like, oh, we're not going to let you bet on this particular thing, but we're going to let you bet the house on that other thing, just because this
I
thing competes with us.
I agree. I agree, and I think accredited investor laws are like complete bullshit and one of the biggest barriers to like upward financial mobility, at least in the States. But let me play the like maybe the government isn't evil side of this. And it is a reality that when there are very few constraints, you get a lot more attempts to like they're basically just a lot more scammers, right? And
Sure.
and people who are not like very deep in some field have a tough time identifying whether something is a scam or not, which makes sense. But they also, because it's all over the news and everyone's doing it, everyone's getting rich, they feel like they should be involved. I think this exact same thing happens with stocks, like public market stocks. Like, why are all these people invested in Tesla? Do they understand the financials? Do they read the annual reports? Probably not. But, it- so there's two sides, but I like my personal approach is always to err on the side of like human autonomy because I don't know, like,
Likewise.
what the fuck are we doing here if we can't, like, just explore and live the life we want as long as it doesn't harm others? Like, I don't know.
And look, I'm not even saying that governments are necessarily evil, even though they insist on proving me wrong over and over. I'm just saying that this is a self-preservation thing for them. That this competes with something that they think they're the only ones who should be allowed to do it. Therefore, they fight it. And as long as, and I, for what it's worth, I also think that casinos should be legal as well. But if a country allows gambling and casinos and doesn't allow something like this, then it's not about preserving the little person. It's just hypocrisy.
Hypocrisy, maybe a little bit of corruption. I don't know. One thing that I do want to touch on related to this, and maybe we don't need to stay on this too long, but there was this guy, Mika Honkasalo, who I think is Finnish, he was like ex Parafy Capital, ex The Block, crypto researcher. He was like live tweeting what was going on. But I do think it's absolutely fascinating that we can see what's going on because it's on chain, right? Like when LFG moves its Bitcoin and everyone's like, it's moved. It's like,
Yeah.
oh, like just how much, like, I think that is just so much better than things happening behind closed doors. Like it's just it it removes so much information advantage from like a few institutions, and gives it to basically everybody. Like this is random people all over the world who are probably following this, who are probably shorting or whatever, like trading based on this information. And like I think objectively, a world where some random dude in like India can out trade like Citadel, it is like that is a better world.
Yes. No, I
Uh,
absolutely agree with you. Honestly, and I think I've said this before. One of the things that kept me away from crypto for the longest time was the utter lack of privacy. But when things get to a certain size, that also has positive side effects like this, basically. The fact that LFG couldn't just, I don't know, pretend that they were still holding the reserves while market dumping them, for instance, levels the playing field significantly.
yeah, I agree. On the topic of privacy, really quickly, I was just gonna give a shout out. I just talked to the Elusive team who are building basically privacy for Solana, like transfers. Their vision is like, let's basically allow all payments on Solana to be private if people want them to be, and because it's Solana, it doesn't cost anything. So I think that could be really really cool, and they seem to be very sharp. So that stuff is coming. I think the tricky part is always the compliance side of things, but they at least they had a reasonable roadmap for that, and I think most privacy projects are going to need to have very clear communication about how they're going to figure out the compliance if they're going to navigate this coming
Yeah.
world. But I want to move on. Like, could can we discuss the crypto market in a high interest rate, non QE environment?
Go
Because
ahead.
because like crypto has only existed in a low interest rate quantitative easing environment, right? It was created basically, Bitcoin was created basically as a response to 2008. And since then, the sort of financial environment has been largely the same. And it's very interesting to think what happens now when that changes. Now, there's always this question. So interest rates are definitely going up. There's always this question of like, are they going to stop quantitative easing? And personally, I find it very hard to believe it, and not because anyone is malicious. Like what central banks should do is let the economy go into a depression, right? Like they should let it like not crash, but like they should let it go down so that we can rebuild on a stable foundation versus artificially continue pumping it. The problem is nobody wants to be that guy who's there responsible and then seen as having caused it, right? And so I think it's considerably more likely they try to pass the baton and just keep quantitative easing at some point, which is going to be pretty bad for equality and everything else, like income inequality. But to go back to this point, I'll 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 lay out sort of the two sides of this, and then I'm curious to hear what you think. So one side of the argument is that high interest rates mean and less quantitative easing basically means risk assets get crushed, and we've seen that now across the stock market and arguably across crypto as well, because like people just need money, right, for stuff. It's not flying around freely everywhere, and so that's sort of an argument for why this is bad for crypto. On the other side, though, is that in a high interest rate environment, your sort of required return from an investment increases. Like, like a 3% return is no longer okay for large institutional investors. You need a lot more. This was actually um, verbalized to me by Philip, ex Blue Yard building Violet protocol, that it- what crypto can do though is drive an immense amount of operational and thus financial efficiency, especially in the DeFi space, right? And so as the return requirements get larger, the sort of cost to the system of the middlemen also gets larger. And so you want to remove more middlemen in order to get to those return requirements. And I think that there is this that's a somewhat compelling argument. Like sort of tech stocks where you make no revenue, obviously they're going to get completely annihilated. But if you need to make a higher return, there's not that many avenues of approach in crypto. Even just volatility is actually useful to be able to viably say that I could make a larger return on this, right? And so there's these two sides which are competing. And I think I'm gonna have to get into like a Zen Buddhist mindset and just have these two thoughts at the same time. But I'm curious to hear what you think.
Do you know what the Necker cube is?
Necker cube.
Yeah, you're gonna need to
That
look it up.
that's
But
not
yeah,
related to Richard Branson's Necker Island.
I do not believe so. It's
Oh right, the
basically a
optical
web.
illusion.
Exactly.
Yeah.
But and you can see basically either side, and it's basically impossible to hold both continually in your mind at the same time. So that sounds kind of like what you're trying to do here. The
Unless you are enlightened, my friend.
or a vampire from Peter Watts's Blind Side, by the way, which I started rereading. The anyway, let me see if I understand the argument for, let's say, the pro argument, because the pro crypto growth argument, because the con is pretty straightforward, right? Is the argument here that given that DeFi protocols remove the need for an intermediary or significantly reduce the friction that intermediary brings, therefore they increase the returns. And that is why crypto is likely to become attractive. Is that the argument?
Pretty much. So the argument is basically that there are a lot of middlemen in the traditional financial world who have been that's been an acceptable sort of situation while everything is going up and everything is wonderful. We're in la la land. But as it goes down, those middlemen are no longer acceptable. And like in crypto allows you to minimize middlemen more than traditional finance would. I would
I
argue.
would argue that that's not necessarily crypto per se. It's the way the crypto has gone about things in general.
Well, yeah,
But
that's probably true.
basically, you could just take Aave and, I don't know, clone Aave and run it behind the
But
firewall with 3 validators, right? If you want.
so what I mean by crypto allows you to do that is more in the sense of if you have like a company will try to maximize its revenue, but a network protocol that's open source has limited ability to do that because it can be forked and like there's relatively free competition, which should drive down the cost of the middleman compared to the traditional world where you also have barriers to entry for competition and so on.
Okay, that is perfectly possible, but that is not an argument necessarily about why crypto would survive or even thrive. That is just an argument for why some applications inside crypto might survive the next few years and continue driving some fees to some base chains, right?
Yeah. Well, so I do think it's an argument for Thrive in a sense, but not like crypto broadly, more specifically DeFi, where there's like I think we're still in a situation in crypto where DeFi is like really the only validated use case, I would say. There's maybe some others, but like we're certainly not at decentralized web yet, right? Yeah. And they're like all these organizations that have been, you know, they've been like crackheads because there's just been money everywhere. They haven't needed to think about operational efficiency. They'll suddenly start needing to think about how to make things very efficient so that they can remain relevant or maybe in the worst case solvent. And I think that will drive them to crypto in larger swaths than we may have seen. Now this time frames are, who knows? I don't know. But I think that I think there's a reasonable chance that that happens. Like if you just if you want to provide some financial service and and the assets or currencies you want to operate with are available on chain and there's the lending markets, whatever, you want to provide a lending service, it just makes sense possibly to use a crypto lending market or DeFi lending market as the backbone for your operations versus running it all yourself. But
Okay,
I
but
don't know.
what's the scenarios here? Say big corp comes in and lends money in Aave, for instance, in a permission section of Aave. That's only one part of the thing, right? You need somebody else borrowing from there for this company to get the yield. Are these other companies, or do we expect enough random
This is
individuals to be using this to soak up the offering?
No, I have zero faith in the idea that everyone's going to become like a crypto user. I think that is just not at all like I just
Feasible.
every now and then I imagine like trying to teach my parents to use a ledger and it just I know I have to accept that that's not going to happen. Um But more it's like other companies, right? So you have the supply side, which is provided by some, but I think my point is mainly that they're going to be attaching to the real world where the end product may not have sort of anything crypto much about it. And this isn't like a new idea or
Hmm.
anything, but I think this situation might drive it in that direction faster. Where if you're providing a lending service, you might have an easier time of getting a proper margin if you're using like on-chain lending services as the backbone, and your users may never see crypto.
Okay, I that's possible, but I see a few things that don't drive me exactly crazy about it. Mostly when we start thinking about second order effects. One of them being that if companies are putting their whatever large amounts they want into this for lending, this is going to bring in even more governmental attention, and they're likely going to start beating DeFi protocols with a stick to make sure that they conform
They
to
just
whatever governments want, right?
they need
Uh,
they need to create permission pools. Yeah.
yes. But the issue is that I don't think that's going to stop at is this particular pool in Aave permission is going to be more of a blanket thing of if you're providing this type of service to the market at large, then you need to comply with all this stuff. So that will that the way that this is likely to be written will likely affect you, even if you are not catering to institutions. Is what I'm saying,
Mm,
and that is a concern for me.
yeah.
The second is that again, this doesn't really this is crypto usage, and depending on, I don't know, suppose that this all runs on Ethereum, then some Ether is going to be getting burnt for fees, right? So if you're holding Ether, that's great, but that does not create a crypto ecosystem, right? This is just a particular application that thrives. The rest of the ecosystem is not really impacted by something like this.
Yes, but what is the rest of the ecosystem?
All the random weird
Are you
things we
talking
haven't
about
get.
NFTs?
That's one, for instance. They are random things, and something interesting could come out of this. Like it's probably not going to be PFP projects, but something interesting can come out of this on the road. There are
Agreed.
like deep DeFi wasn't a thing until a few years ago, right? And it started happening because of random experiments that ended up leading us here. So my concern is that if we fall just back into that, then we're not going to get all the little random experimentation that is happening right now. And that is the stuff that I find interesting.
So you think that like sort of regulation would be such a blanket, generic compliance framework that it wouldn't be scoped to just DeFi. It would be sort of everybody.
No, not quite. I do think that on regulation side, I think if this gets regulated, it's not going to be scoped to DeFi that's providing services to institutionals. It's going to be scoped to DeFi as a whole. So that's one side of it. But the other thing that I'm saying is that if this is the type of activity that we expect to survive on for the next few years, and customers are not even seeing crypto, as you mentioned, because you're just putting this interface to reduce the cognitive overhead for them, then that means that we're not getting new users and new use cases that are just experimenting and creating random behaviors on chain. Right.
Well, there's still like, so I think those aren't mutually exclusive. I think the question is, do we want everybody as users of crypto like directly, or do we want or do we accept the fact that the mainstream is not going to do private key storage in a safe way, and that there's always the option for everyone to use it directly, but if they don't feel comfortable doing that, which again, arguably most people shouldn't, then they use one of these services, which makes it easier, right? And that doesn't exclude people from trying, but I understand the experiment aspect, and like I've I've always said I think that there's a lot of value in crypto being kind of like a sandbox for the financial ecosystem, or like where we just run crazy experiments. We need to run them at scale to even see like what actually works and what doesn't. Like, how do you build a viable alternative to the current financial system? Is you need to build things that are somewhere near the scale of the current financial system. Um, and so that I think makes a lot of sense, but I don't think that's going to go away per se. So there's on a regulatory side of things, there's always going to be some countries which don't regulate it, right? And so then people will just flock to those countries. Um, Maybe there's going to be tighter regulation in certain areas. I hope they regulate things that are mature enough, and if they do that, I think we're golden, right? But I know they're probably not going to do that.
You're so much of an optimist that it hurts sometimes.
Well,
Yeah.
but that would be like if I was to say like what should regulators do is they should look at these like known established categories, dexes, lending marketplaces, things like that, and craft regulation for those, but don't get into like these small things that are still iterating, still trying to find product market fit, because then you just kill innovation. It sucks.
Yeah, at most, I'm not going to go out and say that I like regulation, but if you force me to pick one type of regulation, how I would do regulation if I have a gun to my head is that how I would go about it is basically by codifying best practices on areas that, as you mentioned, are already established enough to have best practices. Right? You just codify the things that you have seen emerged as the
Yeah.
stuff that works in the space. Sadly, that is
this
not
is
how regulators seem to think. Regulators seem to think,
no,
I know better and I'm going to tell you how to do it because you have no idea what's good for you.
while being in an age bracket where, they basically cannot even comprehend how the internet works. But I think to close on this topic, like
No, actually,
it's it
before we close, you mentioned that we want everybody to be users of crypto, and personally, yeah, I do. I don't think it's going to happen, and I don't think we're going to get everyone. But damn it, if I don't think that a world where people have more control over their money and their data is a better world than one where they don't. And
I I 100% agree with that. However, I am okay with it as long as it's an option for everyone. I don't
yeah,
think it makes sense to force people to do things that are technically too difficult for them. For example, not building the tools for the mainstream to be able to participate because it's too technical, for example. And there is an argument to be made that maybe the mainstream should not be participating yet. Because I say this every year on like some podcasts, but I think people just I don't know. I think people well, they first of all, nobody listens to me. And second of all, I think that it's just like too big where it seems like it should be ready. Crypto, blockchain, all this shit is not ready at all. Like
yeah,
we have
I
some
agree.
we have some like conceptual pillars which we've established mainly in DeFi. We have a sense of how layer one networks work, although I would argue that that could also change dramatically in the future. Sort of, I, I'll go on this tangent just because it's in my mind. But so, like, if you want to build a web application, right? You cannot do that on a blockchain. And if you think about what a web application requires, you pretty quickly get to like to the feeling or intuition that okay, we need something like Filecoin and Arweave. And then you can build entire web applications. And I think once that is possible, this stuff starts looking very different, right? Because it's just like once you can store data, you can store code, you can build entire applications on these systems. I think that changes the game quite a lot. But yeah,
I agree. Now, the other thing, by the way, that since we're hyping different companies, since we're
are we?
bringing them up, no, the Zengo, actually, you mentioned that we can't expect people to be storing seed phrases and handling their keys, and that's perfectly valid because people will screw it up, or there'll be Bored Ape Chat Club users that enter the seed phrase everywhere that they get asked. But you have keyless wallets that are non-custodial through MPC like Zengo. And while I wouldn't be putting hundreds of millions on a closed source wallet, I also don't happen to have hundreds of millions. And the majority of users that you want interacting with small things don't either. So one of
Mm.
these wallets, a wallet like Zengo, True Wallet Connect, could be a perfectly safe way for people to interact with the ecosystem without having to worry about their keys at all.
Yeah, but I mean, it's another example, sort of like the. So while I agree with that, interacting with these applications, even with Zengo, is that there's a technical understanding that's
Yeah.
required, right? And Zengo, you're not in is it it's non-custodial or no?
Yes. It's
It
non-custodial.
is non-custodial. Okay. So you can yourself like give a smart contract an allowance, things like
Yes.
that.
Now
So this
that
is
now that they have Wallet Connect, you can just pay, but basically use as a Wallet Connect.
but this is what I mean. Like, how many crypto users do you think out of everybody who's used crypto knows what an allowance on Ethereum is?
Fair enough.
Which is a good segue to bring up Revoke.Cash. This is like a name dropping episode, but just to be clear, even Like for example, this project, I just found it through someone's tweet storm. I didn't know such a thing exists. No affiliation as such. But so just quickly for any listeners, allowance is basically you give a smart contract the ability to pull funds from your address. And this is basically how Uniswap works and how like pretty much every DeFi application works like this. So you give them an allowance and then they pull them out as opposed to you like sending it per se. And the issue with allowance is that generally it's an unlimited allowance. This makes things easier for the application developers. So that's what they usually default to. Problem is that that allowance remains. And so if there was a bug or a hack or someone was able to do something on that smart contract could pull funds from your wallet. This is why it would be good. And I was very happy to discover that there are services which allow you to just revoke all your allowances. And I think that is something that everyone should do quite regularly because it is a very real risk.
And no,
And
this is
most
very much
people are probably not using application specific wallets or anything like that.
this is very much of an Ethereum specific thing, right? For if people are
Yeah.
wondering, if I recall correctly, one of the reasons for unlimited allowances is that every time that you do an allowance, you're basically paying a fee as well. So you didn't want to have to do two transactions. You just wanted to do to execute the one transaction that you were calling. This is not a problem in Solana, for instance, as far as I'm concerned. And it was a problem with some wallets like Phantom that originally by default they had like unlimited approve or auto approve or something and transactions. Not the best setting ever, but I don't know of any wallets that are still doing that.
Yeah, but I mean, if you're not sure, I would recommend going to Revoke.Cash and putting in your Ethereum address, seeing where you have allowances and revoking them. You can always give the allowances back when you use the service again, so there's really no harm in doing it, and it makes things considerably safer. So in my notes, I don't the the next thing I had in my notes was basically not even crypto related. It was Tiger Global monstrous losses. But it's sort of related to the high interest rate environment and all that stuff. So I think what will be fascinating is so Tiger Global wiped out like 2/3 of their gains that they've had since they started in 2001, which is
That's gonna be one monster clawback, right?
oh
Oh,
my god.
by the way, I realized that this is a very specific VC specific term. So in case people don't know what a clawback is. So what happens is that most funds work on a 2 plus 20, right? You get assets under management and you get to keep 2% of everything that you're managing and then 20% of whatever you make, right? So if this year you make $1 billion for your liquid partners, then you get to keep 200 million and you take that to the bank and you pay taxes and you buy Ferraris or whatever. The issue is that there are clawback clauses, which means that if the next year you lose them a lot of money, it's perfectly possible that they get demand back some of the money that they already paid you last year, which you probably don't have because of the taxes and the Ferraris. So
Hmm.
I would be quite curious to see how Tiger Global is handling this.
Yeah, and this is like I'm sure you know, but Tiger was one of these. There were a few hedge funds in the crypto industry that over the past, let's say, year became notorious for just like running around and dishing out money, sort of
Yeah.
SoftBank style. And SoftBank has made a couple crypto investments as well. Although I don't think they were quite as aggressive here as they were with some of their traditional tech companies.
They
But
went pretty hard for the sandbox, if I recall correctly.
it could have been, yeah. They also invested in Alio and there was something else. But anyway, I but Tiger was maybe the most synonymous with like dishing out cash. And if you look at the numbers of their venture portfolio or their venture funds, they had raised like over $10 billion venture funds like every 6 months and managed to deploy them. pretty much in that time, which is like, if you like, what there's all these stories and these are anecdotes. I don't know if they're true, but like, it sounds true to me because I've heard from founders about circumstances kind of like this, where Tiger team would like fly into Singapore or something, meet with three teams and give term sheets, like just absolute insanity. And I think that is another, it's another product of the low interest rate environment, right? Like, basically, as long as the music is going, it makes sense to just keep and that to me, like, it's not that Tiger was stupid. They weren't. I think they were far from stupid. They understood that market prices are currently not like correlated with real value of companies, of crypto, or anything. And so if market prices are correlated primarily with how much quantitative easing is being done, then it makes sense to just keep pumping money into things until the music stops. And it's still unclear to me if the music has stopped. Like I was saying earlier, I struggle to believe they'll stop doing quantitative easing. Like, it's maybe you let it go, let the market go down a little bit, and then you're like, oh, we need to stop a depression, and then, or sorry, a recession, and then you start doing it again or whatever. But like, it's sort of like hardcore, straight at the wall. And I guarantee you, the people at Tiger, like the employees and whatever, even though they put up a lot of their own capital in these funds, by the way, so they also lost a tidy chunk. I suspect they made tons of money doing this. And unlike Archegos, or however you pronounce that name, they're not being, I mean, they're probably going to get sued in various ways, but like, they're not like being hoisted as like the poster boy of fraud, right? Like, it's a different kind of treatment.
Well, there's a
So,
difference between losses and just outright fraud, right? There's a huge difference between making a bad bet and lying. So, and you're allowed to make bad bets.
well, so just to be clear, in the Archegos case, the fraud is largely a question of intention. So the lawsuit primarily rests on, well, there's two things. Is one is, did they outright lie about their leverage at other banks in the Archegos? We don't need to go into the specifics. And then also, was the intent to defraud? And intent is a murky fucking water. Like, and so there's fraud and there's stupidity, and sometimes they look the same, sometimes they don't. I'm just ranting, but I have a question. And this is what's been on my mind now, is like, and this is related to the crypto and a higher interest rate environment, but what does the next like 3 years for crypto look like?
That's a weird one. Making predictions is very hard, particularly about the future. So let me first tackle the high interest rate comment that you made.
Let me be clear. Everything you say, I will write down, and then if you're wrong, I will point it out in 3 years' time.
I am sure. And now we're saying these things live. So, I'm going to have other people telling me about it as well. Anyway, but the high interest rate thing, I'm inclined to agree with you that I don't think that they're just going to continue raising rates for the next 2-3 years, right? The stock market, let's not even look at crypto. The stock market has been freaking horrifying. Eventually somebody is going to want to get reelected, and they're going to realize that they can't get reelected with the stock market looking like this. And likely are going to start printing money, say, a few months before the party primary, at least, to make sure that they don't get any challenges.
Yeah.
So that's what I think is going to happen there. Now, at which degree they're going to do it, that is the question.
Yeah.
And that is what is actually going to end up affecting crypto or not. Right now, what is it going to look like? I I think that cycles are accelerating. The Suzu's whole thing of super cycle, like it's complete bullshit. If anything, what I think is happening is that we're just getting the cycles are becoming faster and faster and faster. And
And this is like a comment on that quickly. There were a lot of people talking about how this is going to be a super cycle. Anyone who listens to those people should bear in mind that those people generally are highly incentivized to make other people think it's going to be a super cycle.
yeah, and also that the same people were recommending, because Suzu was recommending on Twitter that people should like, oh, borrow from here and put it into UST and get 30%. And that tweet seems to have disappeared for some really odd reason. Who would have thought? Anyway, I don't think we're gonna get super cycles. I think that we're just gonna get basically acceleration, and we're gonna get faster and more brutal cycles. Like this has been a brutal, massive thing, and it wouldn't surprise me if Bitcoin is at 80K in October and then touches 25 again by March, right? Like I'm not saying it's going to happen. What I'm saying is that this sort of speed up and down is what would really not surprise me at all.
This is fun. I get to be like the old guy in the room, you know. I'm like the grandparent who just is like, oh, this comes in with all this like seen so many market cycles, blah blah. I love it. I actually think the exact opposite. Interestingly, so I think
Longer cycles.
yeah, I think it by and large the cycles have actually been slowing down. Like in the very early days of Bitcoin, the cycles were like really quick, like 2 years, and they seem to be slowing down now. Who knows what happens in the future? I think a psychological element to that, which is that people need. There's like two things. The technology needs to improve. There needs to be new things to get people excited, and people need like a mental health break before they can get excited again. And I especially mean the people who like in these cycles lose a lot of money, right? And it's just kind of a shame because actually the best thing would be for those people to stay now involved versus come back in the next bull market. But what seems to be the case by and large is that people come for one bull market, they usually get absolutely annihilated. Then they're like, next time this is not going to happen to me. And then the next bull market happens and they're more prepared and they get involved. They probably still get a little bit annihilated because they still believe the whole like this time is different, blah, blah stuff. And then around and abouts, but they get involved and they stay. And then probably by the time the third bull market, they're like well prepared and mentally resilient enough to handle it. But I think that I, I I'm I suspect that we're in for a long winter, which is more sideways. At least those are what winters look like. There's some big drops. There's some like percentage wise, there's big drops and big pumps, but those are sort of because they happen at such a smaller scale. They like don't impact stuff as much. But I'm while it's a shame that this like I was definitely expecting that we would go into a proper bear market. And I think where we were was not yet a proper bear market. It is a shame that I think it was like amplified by this Terra thing. Because I think if that hadn't happened, just faith would be a little bit higher and people would be a little bit less cautious about holding money in general in crypto. But what that does mean and is that like I will probably get to start buying stuff again at some point for the first time in a long time. I I don't even remember the last time I bought crypto. It was like, I don't know, it was a very long time ago. But then figuring out when to buy, like That's not a question that anyone can answer, right? Like, who know, macro environment could cause everything to go down a lot more. I don't know. But typically what happens is that you have quite a long bear market, and it's very obvious when you're in the bear market because it's been going on for a while. Like, it's not like prices came down and it's been 2 weeks. This must be the bear market. It's like, okay, nothing has happened for like a year or 2. You're probably in the bear market. And then so
Well,
I
Bitcoin
like timing that
has
is
had
hard,
like 7 straight red weekly closes. That's that's not a correction.
right?
Yeah.
At the same time, like, you don't know where the bottom is. So
Well, sure.
it's
Um,
easy to wait because if the cycle stays around and about the same, you have this incredibly long period of time where while there is big price changes, like most of those prices are very good if there is another bull market, right? So I don't know. This is just how I think about it, and I have this genius strategy of buy low, sell high.
Now, what I'm saying is that I think it's when you get like a couple months of just straight red weekly closes, yeah, that's pretty much you're entering a bear market as far as I'm concerned. I
Yeah,
agree
yeah.
with you that we haven't reached the bottom probably, but it's really, I don't think that there's anyone who's going to argue that this thing is just a temporary correction and we're going to be up in like a couple weeks or something.
I agree with that. I think my point is mainly around the fact that there's a lot of this talk of buy the dip, and there's a lot of especially Bitcoiners who like come out whenever there's a small correction, and they're like, "This is one of the best buying opportunities I've ever seen," and that is such complete bullshit. Like it, like buying the dip is the worst strategy because first of all, it may not be just a dip. And second of all, if it is the bear market, it's going to be like that for a while. You don't need to rush in and buy. And that is actually what I think has been holding the market up for this past year is a lot of new funds with a lot of capital being very overeager to deploy and thinking that we're in the bear market already. And I think those guys got absolutely crushed
I
because
agree.
so in 2021 and sort of early 2022, there was tons of capital going into new funds, very inexperienced managers by and large. Like, who's experienced in crypto? Most fund managers I know in crypto have been in crypto since like 2018. So, like that's what it is, right? And so I think they just started deploying way too early and that buoyed the prices and those guys are I mean if we have another bull market and the sort of same general trend continues, I think those guys will be fine, but it's going to be a brutal fucking 3 years if you're sitting on like 30, 40, 50% losses in your first few months.
Yeah. Yeah, I will see. I suspect that, as I said, particularly as we approach the election in the states, we're gonna start seeing more capital and more money entering the system. And I do think that's where we're gonna get this spikes in price, and probably then they're gonna get massively dumped on by anybody who didn't dump before. Like, whoa, you're
Mm,
still holding 20% of your Bitcoin? Like, oh, I'm just gonna wait until this thing looks like it's peaking, and I'm gonna hammer the hell down. So that's why I do think that we're gonna get this more violent ups and downs during the next
mm,
couple 3 years, and it might stabilize after the election. But and the thing is, that is the only. Let's say that the re-election battle is the only likely catalyst that I see for the U.S. to just start printing money again. They need to salvage the market,
mm.
the stock market.
Well, yeah, also the war and whatever other fear causing events are happening, right? Well, on that note, though, I think that's exactly right, and it sort of to just tie it back to the Terra thing. If they try to resuscitate it, surely everyone who's still holding is gonna dump the shit out of it,
Yeah.
right? Like you're like, oh, here's my chance. Like if you have been holding UST this whole time, and at some point is at like 0.9, you're gonna get the fuck out if there's any liquidity in the system.
I don't see it coming back from here. Is this
No.
like Luna said what, the 3 cents, something like that? Anybody who was interested in buying that would be scooping it up now. So what do you wait?
Yeah,
1 cent?
it's the chart is one of the most dramatic charts I've seen, I think, ever in crypto. There's like this steady rise, and then just a wall down all the way to the bottom.
And I mentioned this is not one of the most dramatic things that I've seen. I've never seen anything like it outside of outright scams, right? Like things that, oh yeah, there was a rock pull here and then all the money went out. Like yeah, Doc
Yeah.
One was a braggart and is a braggart and an asshole and everything, but I don't think this was a scam. This was just a flawed project. And I've never seen a flawed project collapse this spectacularly. It's just,
Well,
it's
nothing else
astounding.
has gotten as big, right? Like
As big as quickly.
it feels it's very similar to Olympus DAO, right? Like it gets very big very quickly. On Olympus was much smaller scale still, but and this is, I think, the high yield thing, right? You drive a lot of demand very quickly, and then at some point when you reach some peak of demand where there's not new money coming in anymore, it creates this moment in time where if you don't correct like the parameters very quickly and you don't have enough liquidity, then it just all goes cascading liquidations all the way down.
Yeah, but I'll need to look at the OM chart again. I remember that thing to be more like a ups and downs, lights, and you could tell that it was going down, but it didn't fall off a cliff. So let me check that quickly.
It's true. It's not the same kind of like straight wall drop. That felt dramatic when it was happening, but I agree. It's not quite the same as this one.
Sadly, we have readjusted our sense of what dramatic means.
Right. 50 billion or so in value wiped out in like 48 hours. Oh,
Now, Olympus felt bad, but it actually, Olympus felt a lot more. There's this chart running around that people keep referencing of, the first when you actually reach the peak and then it crashes, but you're still in denial, and then there's the first bounce, and people think that it's going to continue going up, and then it actually continues crashing. Olympus looked a lot more like that chart. It didn't look just like a complete vertical wall.
well, USDC has held the most strong, and I think that for good or for bad, the future of stable coins is things collateralized by real world assets.
Oh, USDC should not lose its peg for anything other than emotional reasons, right? Because it is audited monthly to be backed 1-to-1.
I know, but it could theoretically, if someone just dumps too much on a single exchange, it could drop from the peg, right? If there's not enough liquidity. But other than that, no, yeah.
Theoretically and temporarily, but it's
Yeah.
not like, I don't know, if a report were to come out of finally somebody audited Tether, or some whistleblower dumped Tether's documents on the market, and a report were to come out, that instead of just like, the last statement that I saw from them was that it was collateralized to like 87% with assets and commercial paper.
Tether.
If it were to come out that it's not 87%, but 50 or 40, then Tether would dump and it wouldn't be a
I'm
temporary thing. Right.
no, but I think Tether, like as sketchy as they are, right? I do think they have plenty of capital to pull on if need be.
Well, the 87% comment was from somebody from Tether. So it's
Yeah.
it wasn't exactly like a critic. I can look it up after. But, actually, I'm going to look it up now.
I don't know. I have no idea what Tether's backing is, but I imagine that like the, they must have just
Actually,
made such a shit ton of money
I
in
have it
recent
right here.
years.
It's not 87%. It was a lawyer from Tether Limited who claimed that each Tether was backed by 74 cents in cash and cash equivalents.
Mm,
So it's not even 87%.
but that might be enough.
It's
That is
okay. But
way more than LFG had,
sure.
percentage wise of market cap, right?
But my point here is, first of all, that this is an unaudited statement. This is just a lawyer saying like, hey, we're fine, right? That if it were to come out that that number is not true, then chances are it would be an unrecoverable event, basically. Unlike the case where you mentioned that if somebody dumps a lot of USDC, there might not be enough on the market. That's going to be a temporary thing.
Yeah, exactly. So I agree. But like realistically, the question is like, how much capital flight, if there is like some fear about a stable coin, how much capital flight happens until that fear goes away, right? And do you have enough capital to deal with that capital flight? And while we like ideally, right, everything is one to one, and so then it's not an issue, but it is true that in a lot of cases, it's actually unlikely that capital flight is 100%. And thus, you can keep a peg. I'm pretty sure if you have 70%, especially in the case of Tether, where nobody really knows. So, you know, it's more a question of like, does the peg hold than what's under it? I think they can probably keep it stable. But I don't know. I think Tether is sketchy as shit. Don't get me wrong. I don't use USDT, and I will never use USDT, and I will certainly not store any of my like wealth or whatever in USDT. But they seem to be pretty good at keeping the peg. I'll say that.
Yeah, so far. But
Yeah, so far.
so the
Um,
USDT.
yeah, true.
One thing
But,
that is because
but let's be clear. Tether is like the OG. They have been through a lot worse than, well, no, a lot worse than USD now, but like they've been through a lot of stuff. they've
what?
they've had to like use all kinds of shady banking partners because banks wouldn't give them bank accounts, and then those banking partners have just run off with the money. Like, they've had to deal with that stuff, and they're still here, which I gotta give them credit, first of all, for the fact that they came up with this shit that early. Like that was years before anyone else was even thinking that stable coins should be a thing in that way, at least. I mean, it was first on the Omni protocol or
Yeah.
something, like complete so OG. But and then also that they've managed to get this far, but I wouldn't use it. Anyway, it the last thing I had was I just yesterday, I think I was cooking or something. I had this thought. I was like, why do I like the name spelunking when usually the term is like, going into a rabbit hole in crypto? And I think there's like a very nice, appropriate analogy here where going into a rabbit hole doesn't sound like a very dangerous activity per se, maybe to a human because you
Yeah.
get stuck, but it's just a hole you kind of go check, look around, maybe you go deeper. Like it's primarily a positive thing. Spelunking, on the other hand, I think is more accurate when we're talking about the crypto industry, right? Like it's very exciting. You can see a lot of cool shit. You can go really deep, but there are very sharp edges and you could die.
Yeah, you may end up with your foot stuck in a crevice and then starving to death because you can't get out. Or there's
Exactly.
a mild tremor while you're there and a gigantic rock falls on your head.
You may need to cut off your own foot in order to get out.
It's got a nice ring to it. And rabbit hole again for me has I don't know, I guess it's more connotations of exploration or research than anything else, and not
Yeah.
the let's go in and see what the hell happens.
Exactly. Let's go in and hopefully we come back.
Yeah, and hope we were appropriately prepared for the experiment.
Right. Exactly. I think it's very apt. Thank you. I need to jump.
Cool,
So
man. Good chat with you.
nice chat.
Good, then.
I'm looking forward to another exciting week in crypto.
Yeah, well, hopefully we'll have a
Hopefully
quiet weekend this time.
it would be nice to just get some peace and quiet for a while. All right. Thanks everybody.
Take care, man. Ciao.